Climate change is clearly a defining moment of our time. The world is unequivocally warming. It's a very urgent problem. Carbon markets can play a hugely important role in tackling climate change. They, in particular, allow governments and corporates to reduce emissions at lower cost. And if we can do that, we can get better bang for our buck in taking emissions out of the atmosphere. Carbon credits define the climate benefit of an activity that is outside of a company's actions. These credits can be calculated, they can be defined, and they can be traded. They can come from a wide variety of projects. For example, protecting forests, growing new forests, renewable energy projects, sequestering carbon from the atmosphere underground. 300 or 400 different types of projects are currently eligible to reduce emissions throughout the world. The voluntary carbon market can really unlock huge quantities of capital that are needed to make these projects viable. Fund managers, asset owners are going to be increasingly required to understand what the companies they're investing in are actually doing on climate, on the ground, what their net impact is, and what risks they carry going forwards. So companies that are performing well on the climate may hold a lower risk and a better return profile as we transition away from fossil fuels. MSCI Carbon Markets, through the acquisition of Trove Research, builds on over 20 years' experience in understanding and analysing these markets. And we've built teams of experts, scientists, engineers, economists. We track over 10,000 corporate climate commitments. We assess over 15,000 carbon projects, and we have data on over 1 million carbon credit transactions. Big decisions are being made based on how this market functions. Significant commitments by companies, investment decisions in projects, which may have effects 10, 15 years down the line. There really isn't any time to lose.